1 minute, 1 minute. Markets extend gains in Friday's opening deals, looking past weakness in global markets. Sensex jumps over 200 points, Nifty about 21,700. Broader markets in tandem with the benchmarks, mid-cap and small caps open at a record high, jump over 1% each. Meanwhile, roaring rally for Realty continues. Phoenix Mills, Indiabulls lead gains. The private sector lender HDFC sees slow growth in its Q3 deposits. The bank adds over 41,000 worth deposits in December quarter. And Gautam Adani reclaims India's richest title from Mukesh Ambani. The group stocks added over 12,000 crores in market cap in trade today. And India is on its way to become a developed economy, is the word coming in from Aditya Birla Group's Kumar Mangalam Birla. Hello and welcome. This is Agami Vakil. You're watching the F&O Show, a show in which we take you through all that is happening in the futures and options space in Indian equity markets. For now, taking a look at the markets, we are looking at a quiet day of trade. The Nifty is marginally in the green right now, hover higher by around 0.4%. The Bank Nifty, on the other hand, is trending largely flattish, with a gain of less than 0.1%. As far as your broader markets are concerned, we don't have too much to speak for. We do have some amount of movement there as well. So the mid-cap index, of course, is advancing by around 0.6%. And we do have a lot of traction with respect to the mid-cap index as well. But, before that, let's also quickly look at the constituents of the benchmark, perhaps the Nifty in this case, and see where there is a pull and where there is a push. So if you look at how things are panning out when it comes to, names like Infosys, ICICI Bank, Reliance Industries, a whole host of these companies are actually, in fact, doing well. And, we continue to keep an eye on that one. Of course, let's not forget that something like an HDFC Bank, on the other hand, is weighing down on the index. We also have ITC, Sun Pharma, and Britannia also under a tad bit of pressure. So on the whole, it's a fairly evenly poised market at the moment. And we'll continue to keep an eye on that one. Very quickly, take a look at your broader market movers. And that's where you're seeing a little more traction. So you do have NHPC, right at the top of the list, which is advancing by around 4.1%. This is, of course, a clear beneficiary of the new CERC tariffs and, of course, the changes that have come through in terms of hydropower. Motherson Sumi Wiring is the other one, which is, in fact, starting to see an up move now, up around 4%. Apollo Tyres is the other one. That's also up and about. That's advancing by around 3.3% as well as we speak. And, of course, on the losing end, we have some weakness in Bandhan Bank, down around 3.3%, and Max Healthcare is down around 2.4%. So on the whole, we're looking at a fairly mixed market, but more gainers than losers. To very quickly address what's happening in the futures and options space as well, let's pull up the Nifty snapshot and take a look at what's really happening there. And, of course, while the benchmarks remain quiet, we are looking at a good 2.5% increase in open interest as far as the Nifty is concerned. Besides that, and, of course, this is largely towards longs, because do remember that while we did see a bout of, covering of positions yesterday, today is a day where we are seeing a little bit more increase in open interest towards longs. To talk about the Bank Nifty as well, and that is where we are continuing to see an increase in OI. Remember, yesterday was a day where we, in fact, did see a lot of longs building up, even as the index moved higher by around 1%, and we saw a significant increase in OI yesterday. Today, while the index remains quiet, we are seeing more traction as far as the Bank Nifty is concerned as well. Coming down to the futures and, the options space, and that's where we are keeping an eye on a 500-point odd range when it comes to open interest distribution. That is, accentuated by the 22,000 strike call which has maximum open interest, and on the lower end, it is a 21,500 put, which also has max OI, and that's roughly a 500-point range within which you can expect the Nifty to trade within. We don't have too much traction in today's day of trade when it comes to the Nifty 50, of course, in terms of its options, because we're a bit away from its expiration that will come on this Thursday. But once again, we'll continue to keep an eye on some of these aspects as we move into trade today. On that note, I'm going to get in our experts for today. But before that, let's address what's happening with HDFC. Now, we do have the monthly updates for HDFC. And from my understanding, if we could pull up some of those factors and the data points as far as the HDFC is concerned, we could get a better idea of what's really happening there with respect to this quarterly updates. So you do have gross advances, which have moved up 5% sequentially, and deposits, on the other hand, have moved up around 2% sequentially. So these are the two big numbers that we have from HDFC. And besides that, we do want to talk about the corporate book, also the kind of growth that we have seen with respect to your different markets across. So to discuss that, we have Rahul Malani. He's the banking analyst at Sharekhan, who's joining us. Sharekhan by PNB Paribas, pardon me, who's joining us on the show right now. Rahul, good morning, and thanks so much for joining in. Let me start by asking you about the deposit numbers. We are seeing a sequential growth of around 2%. Is this a concern, according to you? How are you reading into this?
Morning. So overall deposit growth has been weak, which has been led by the retail deposits. They have increased by around 530 billion versus our expectation of 800 billion per quarter. So therefore, overall deposit growth is lower. Additionally, if you look at the wholesale deposits front, they have also declined. However, reduction in the high-cost wholesale deposit would additionally support NIMs in this quarter. So It's a mixed set of numbers.
Right. So, and what do you make of, besides deposits, what do you make of the other numbers in general in terms of gross advances?
So overall loan growth.
Yes.
Overall loan growth has been strong, which has been supported by the commercial and rural banking loans and retail loans.
Right.
So in line with the guidance which they have given.
Okay. I do want your comments on the corporate book as well. Is that on its growth path? What are you making of that?
See, basically, we were seeing that if you look at the industry growth, overall system growth has been sluggish in the corporate loans. It has been growing at 8 to 9%. So versus HDFC going in line with the system growth. So if you look at the sequential growth, this quarter they have given around 2% sequential growth. So basically, is in line with the industry growth.
Okay. And finally, Rahul, your view on HDFC Bank, your ratings and your overall target?
See, we continue to maintain a positive stance on HDFC Bank with a 12-month price target of around 1900. We believe that overall in calendar year 2024, we should see in the overall banking sector seeing some reduction of pressure on the overall ROA. But versus HDFC Bank would be one of the bank in the largest private bank space where we should see improvement in the ROA, which should help in re-rating the valuation multiples, because investment thesis and fundamentals are holding up well.
Okay, we'll leave it at that, Rahul. Thank you so much for joining us and taking us through your views on HDFC Bank. Continue to keep an eye on that counter. An all-important one, of course, when it comes to the financial space. But from there on, we get in our experts, our F&O experts for today. And we have Osho Krishnan, Senior Research Analyst for Technicals and Derivatives at Angel One, as well as Aditya Arora, Multi-Asset Research Analyst at Adlytic. Gentlemen, good morning and thank you so much for joining in. Osho, I start with you. Your view on the Nifty. How are you trading in this one? Are you expecting about a consolidation, or do you in fact expect this to trend?
Very good morning, everyone. Well, as you have said, our market have seen a very buoyant move, because even in the recent period, we have seen a deep correction from the zone of 21,800 towards the zone of 21,500. But again, decoupling with the global peers, because if we will be talking about the last session's development, then we have totally decoupled with the global peers, and from the lower end 21,500 we have seen a strong buying traction. And as of now, again, the market is nearing the resistance zone of 21,750 to 21,800. So now is the time where one should maintain a caution sign, because here onwards one can expect some kind of again profit booking in the market, because 21,750 is the zone where it has consolidated the most, approximately 3 days on a consecutive basis. So this is a very cautious zone where one should not be very much aggressive in the market. But overall sentiments remain buoyant, bullish, because overall, if we will be looking at the broader space, broader market, then many of the counters are looking very promising. There are thematical movers which are performing and driving the market on the higher end. But to highlight, Bank Nifty has started gaining traction from yesterday's session. So that is a very positive development for our market, that from here onwards, it might lead our market on the higher front. So on Nifty specifically, 21,800 is the zone, which is a very strong resistance. Once we breach that zone, then again we can see a very strong traction in Nifty. Whereas for Bank Nifty, 48,500 is the zone which is likely to seen as the immediate resistance. Once we see a decisive breakthrough among these indices above the mentioned resistance zone, then from there onwards we can see a very strong upside movement in our market.
Right. Let's get in Aditya into the conversation as well. Aditya, your view on the benchmarks at the moment?
Very good morning, everyone. Just like the way how you're sporting a very calm and dashing look, I expect markets to be little calm at these levels, consolidate within one standard deviation up and down. So I think if we maintain an intraday view, then I think profit booking is visible, and it could further happen till lower levels. So I think intraday view is little bearish. But if we maintain a 1 to 2 week view, then I think market should consolidate with upside bias. So until and unless we don't breach 21,500, one must maintain 1 to 2 weeks of bullish bias. And on Bank Nifty, one must maintain bullish bias until we don't breach 47,500. So that's the view for intraday and 1 to 2 weeks.
Right. Thank you for the compliment, Aditya. But let me, address what's happening in the real estate sector as well, because that's where we are seeing the most amount of an up move there. I want to very quickly, take that up with our experts at the moment. And even though it has given up from day's highs, it has seen a tremendous last 12 months. Aditya, if there's anything that stands out for you, either on the index itself or stocks that belong to this sector, anything that could potentially still have an up move at the moment?
I think the index is pretty much overextended and right now is trading at in overbought territories, and most of the stocks are pretty overstretched and have moved up in a parabolic trend. So I think at these levels there isn't much to gain, and there could be more to lose. So at this point in time, the risk reward is not favorable for the index and components as well.
All right. Well, we'll slip in a quick break, but don't go anywhere. On the other side, we talk about stocks and a lot more. Stay tuned in. Welcome back to the F&O Show. We've seen the market take a direction downwards, and this is a quick one. Of course, we're still marginally in the red, both for at least for the Bank Nifty, we are marginally in the red, and the Nifty has now come off and it's currently trading below the mark of 21,700. Continue to keep an eye on this one because there has been that sharp weakness which has come through. Let's take a look at all the big gainers in open interest at the moment and to see where when what is actually trending. In fact, we do have something like Kotak Mahindra Bank, L&T Finance, along with Shree Cement, which are all shorts. Do remember that Nestle has gone ex-split today, which is why you're seeing that significant change. But besides that, we keep an eye on Oracle Financial Services, which is, of course, seeing longs. Let's flip it over and take a look at all those stocks which are seeing unwinding and longs unwinding largely. GNFC, Chambal Fertilizers, Gujarat Gas, IndusInd Bank, only about a short covering for AB Capital. On that note, let's take in our experts' views and ideas that they do suggest. Osho, I'll come to you on this one. What are the stock ideas that you're recommending to us this morning?
Firstly, the first counter which is in my radar is Tata Communication. If you will be seeing the technical formation of Tata Communication, it has consolidated. Today, it has witnessed a very strong buying in the initial hours. Currently, it is facing some kind of profit booking, but overall momentum or overall structure remains buoyant. So one should definitely try to buy this counter above the zone of 1775. Once it breaches the 1775 levels, then from there onwards, it has the potential to test 1800 on immediate basis and 1830 on positional basis. So one should definitely try to accumulate it on higher levels. 1775 is the zone, and on the downside, 1748 should be kept as the stop loss. The second counter is from the aviation space. If we will be seeing the technical chart of Indigo, then Indigo has seen a very strong closer in yesterday's session, and it is approximately hovering above the same throughout the day. So at current levels also one can accumulate Indigo for a higher target of nearly 3080 and keeping a strict stop loss of 2950 for short-term traders.
Okay, and Aditya, how about you? What are you trading today?
So we are trading Tata Group stocks today, and both the stocks belong to the Tata Group. So first one would be Tata Steel. We have seen good correction in steel counters, metal counters, and at these levels they are consolidating and the trend is pretty much neutral and there's scope for good upside from here. So we'll sell put option, 135 put option in Tata Steel, which is currently trading at 3.80 to 3.95. The stop loss for the same would be 7.5 and target would be 0. So bias over here is bullish, neutral to bullish. And the second stock is TCS, where we can sell 3,600 put option, which is currently trading at 40 rupees. 7.75 should be the stop loss and 0 would be the target. Again, we maintain bullish bias in this counter. I think the trend could be neutral to bullish over here.
Okay, so those are views from two companies from the Tata Group. Let's pull up the Bank Nifty at the moment and see the intraday chart in that case. We're looking at a very, very small pullback from the sharp cut that we've seen over the last 15 odd minutes. The question is that have things changed substantially above a Bank Nifty? You know, prima facie, you may say that it's down just about 0.2%. We are not looking at substantial losses there. But we must also remember that, even when we do see small changes, the fact that option premiums at the moment are so confined, well, it could mean even a small move could mean a largish move on the option premiums. Osho, how are you looking at the Bank Nifty on an intraday basis? Have things changed? And if you were to play this on an intraday basis, what would you look at? What factors would you look at?
Basically for Nifty and Bank Nifty, I am having a very bullish intent, and I was expecting that there can be some kind of profit booking which will be attracting more buyers. So for Bank Nifty, 48,000 on the spot is the first zone where one can expect a decent consolidation for the time being. So the zone should be 47,900 to 48,000 level, where one should try to accumulate Bank Nifty or buy Bank Nifty futures. on the spot zone, and on the higher end, one can definitely expect 48,400 to be acting as the resistance. So 47,900 to 48 is the buying zone, keeping a strict stop loss of 47,700. Overall, the trend remains bullish, but one should definitely try to look for some correction, and there they could proceed with the buying approach.
Okay, gentlemen, we'll leave it at that. Thank you both for joining us and taking us through your views on the markets and, of course, giving us a handful of trading ideas. And from there on, we move on to Jyoti CNC Automation's IPO, which is set to open on January 9. We spoke to the management on the company's IPO plans. Here's a slide of that conversation. Listen in.
I'd like to tell you about this prospect of the IPO. Out of this 1,000 crores, we are going to be largely around 475 crores we are going to pay to our debt, and close to 300 crores we are going to 360 crores we are going to utilize for the next 2 years long-term working capital requirement, and rest we are keeping in terms of a GCF like that, and basically to looking for the further opportunity on the EMS business, so keeping a reserve to that.
Give me a sense of the operations, Mr. Jadeja. I was going through your RHP. You spoke about the fact that the profitability record is not much. In FY23, you were profitable. In the first half, you were profitable by 3.35 crores. And the reason for that being is some of the material subsidiaries were loss-making, especially your overseas subsidiaries. So give me a sense of your operations and which are the subsidiaries which are loss-making, and how do you plan to turn them around?
So basically in let's say 2021 was completely this COVID year that losses has been incurred, and particularly this subsidiary companies are mainly working on aerospace area, and you know that very well that in COVID time the aerospace industries had badly hit over there. But over a period now, after that, we have a robust comeback over there in Europe also. And we have close to, let's say, 1,900 crores of worth of orders are with us today. And from that Eurozone and mainly on aerospace and defense area to be there. These orders we have received last year, and our manufacturing cycle is, let's say, very long manufacturing cycle into that large machines and all. So we have seen some development happen in FY23, but we'll see the better results are in FY24.
Mm-hmm. Is there a cyclicality to your revenues and profitability? Because while you did a 15 crore profits for FY23, the first half the profits were 3.35 crores. So my question was that, despite the fact that EBITDA margins are higher in the first half compared to last financial year, is there a cyclicality or order booking sequence which is leading to depressed profitability in the first half of the year?
Let's say the order book, the way the order book has been built. So next 2 years, this order book are going to be executed there. So thus the overall utilization, everything will be improved. So the profitability will be also is going to be improved in that coming days there. Already we have seen into this first 6 months, the improvement has been seen.
And with that, it's a wrap on the F&O Show. But stay tuned to NDTV Profit for more news and updates.